So the solutions is usually not available to your CPA because they file electronically. And if you file electronically, it's very, very difficult to do this solution. Now, you wanted to talk about Augusta rule.
Augusta, because I've heard watching on Instagram that I can just rent out my house for like 2 weeks and make a ton of money and take it off my taxes. And, I don't really know if that's true or not. So
it is. I've always heard of it as the Augusta rule. The Augusta rule. It's because the rich guys got together and in Augusta, Georgia, during the big golf tournament there for 2 weeks, and they worked it out so that they can rent out their homes for 2 weeks while they're away because they don't want to be there from all the crowds, and then they get to make money tax free. Well, I don't know about all that. I mean, if I had a $10 million house in Augusta, Georgia, I would not want it to rent out my house. I would just leave and not rent it out to fools who I don't know who you are in my $10 million house. Maybe. Nonetheless, that rule has been in there for a while. And when we learned about it, they obviously went over it in our training and said, oh, here's what it is. They don't call it the Augusta rule. It's basically, the rule is it's in 280A, and you can look at the whole section, and it's really kind of found in part G, but it's the whole section. It also covers some other cool things. I honestly strongly recommend. Oh, I see. Thanks for all the threes, everybody. I honestly recommend you look at that Internal Revenue Code. Just literally, if you don't know how to find it in Cornell Law, Title 26, Section 280A, then just type it in ChatGPT and go, can you just show me this? And it'll print it out. It's very readable, very plain English-y. Basically says your residence. Now that includes your second home. It includes it if it were a boat, not if it's an aircraft, but if it were a boat, you're good. Summer home, cabin, log, maybe not a tent, but something substantial. If you're not renting it out for professional use, like you don't have a house in the back that you're renting, that would kill your Augusta rule possibility. You're not Verbo. You're not Airbnb. You're not doing any of that. It's just your humble abode. Maybe not so humble, but your abode. And you're not, why not a plane? Because a plane is not a domicile, according to the IRS. You cannot live technically in a plane because a plane is a mobile vehicle. Same way you couldn't make your RV part of your Augusta rule. That's never going to work. It's meant to move. And you're like, well, what about my mobile home? That doesn't move. Well, I know, but mobile homes are different. There's different rules there. I mean, unless you are moving it around, then no, it's never going to work. So that's expensive, by the way. So it has to be your abode, your home, where you really live, and you cannot make it your business hub. So you cannot get the business use of your home, which we're going to talk about if we have time. Wow, time's going fast. With the business use of your home, no bueno, and Augusta rule. So one or the other. And that's a big bummer for some people. I know it's been for me until I figured out the solution. So those are your two big caveats. As the homeowner, can you do this with your rent? Sure you can, if it's your abode. And your lease allows you to sublet, which the IRS doesn't care about that, but you figure that out with your landlord. You can rent your house up to 15 days. Now, people get this wrong. Oh, it's 14 days. No, it's 15 days, which is 14 nights. That's where the 2 weeks come from. They don't have to be consecutive. They could be any time. One here, one there, the other. It doesn't matter. Or they could be consecutive. Doesn't matter. You have to have a real contract, real rental agreement. There has to be real money that goes back and forth. And y'all think that, oh, well, I'll just hang out and stay in the room and I'll just rent out the other place. No, guys, if you stay there when, oh, hey, Brian. Oh, that's Byron. Brian. Oh, Brian, your name is so small here. Welcome. Another fellow enrolled agent. So if you stay in your home during a rental, that's not a rental. That's a sleepover. That's not deductible, y'all. You can't deduct a sleepover. So you're going to have to leave. You're going to have to go in the RV is fine. Just not, in your place. Go to their place. Well, who knows? So that's your rule. And you have to receive money. Now, here's where CPAs get it so very wrong. You guys don't listen to me, the bald guy. and maybe listen to Sterling, but you don't have to listen to me. Go read the code for yourself. And you tell me anywhere in there, does it say that this income must be reported? Now, look, the IRS, they are so strict about reporting your income. They're very loose about deductions, and we talked about why. But when it comes to reporting your income, you have to report all of your domestically earned income, living domestically, working domestically, or income that you made overseas living domestically, or income you made here living overseas. That's the three big rules. And you're like, there's a lot of loopholes there. I know. But if you don't report that stuff, they're going to come and eat your dog. They're going to come nuke your dog and eat your lunch.
Oh, no.
I know. It's really bad. Don't do that. But in 280A, it says, do not report. It doesn't say it that way, but it basically says no Schedule E for you guys. We do not put Augusta rule income on Schedule E. If you do, theoretically, you could fall prey to what's called the 6702 violation, which is the frivolous filing. You're wasting IRS resources and filing things and putting things on documents that are unnecessary, unwanted, and actually, again, that's bad. That's a $5,000 penalty. I've gotten them. They're not good. So we don't want to play that game. And that's why CPAs, rightly so, are like, I don't want to do the Augusta rule. It's way too much. Yeah, of course. Because if you do that, not only are you going to possibly get audited, you're going to get a big slap fine. And if you're a CPA with a firm or an EA with a firm or whatever you've got, everybody gets audited. That's bad. And the fines are significant. So don't report it. Now, where it gets interesting for people, and Sterling and I talk about this a lot, like, well, who would rent my home then? I don't want some Yahoo schmo coming into my home for 2 weeks or a bunch of weeks at a time. Well, couldn't I have my company that has maybe my family in it or friends or cohorts or whatever I like? Can't they come rent my house? And can't they do business activities, have a symposium, have annual meetings as required? We can have salespeople in. We can do all kinds of things because maybe I have a nice home or maybe I don't, whatever. I can rent it out to them. Can't the company then pay to be there? Yes. But, and then the company rules for deductions all apply. And this isn't, everybody's like, oh, special rules for companies in Augusta rule. No. It's the same old rules as if you'd gone and rented a hotel. There has to be a real agreement. You have to have real money. There has to be a real business purpose. I mean, a significant business purpose. And again, that's very gray. You're going to have proof of the significance, proof of the benefit. And those are the big ones. And just like a regular old deduction, we've got people who have guests come in via Zoom and like teach a class. So then they record the Zoom. So they've got evidence, Look, the IRS knows you're human beings. You need to have fun. You need to sleep. You need to eat and all that other stuff. They get that. But the primary purpose being for business could be really good, especially if you've put in your operating agreement that you have to meet at Johnson's house because he's got the special safe with the documents or whatever that you have to review. Part of the operating agreement makes it even more intense that you've got legitimacy to do it. But some of you are already like, there's a huge problem. Huge. For the company to get the deduction, what does it have to, what's the one thing that I haven't said that they must do? What is every company? If I pay Sterling for a service for me and it's more than $600, what do I have to send to the IRS in order to be able to legitimize that deduction?
A 1099.
Boom. 1099, in this case, an MISC. And once the company files that, sure, it's going to give you the cash and you don't have to report it. Yep, Root's got it, 1099. You don't have to report it. That's great. And it's going to get reported to the IRS. It's going to get reported by the company. Otherwise, they can't deduct it. And if you've set up a C Corp LLC combination like we do with our clients, that's 21%. You just got you got to take it. And now it's getting reported and you don't put it anywhere on your form, and an IRS agent is going to look at this and go, there's a 1099 over there that says you didn't report. Remember what I said? Reporting is critical. You've got to report. they're going to go big problems. Again, another reason why CPAs go crazy over the Augusta rule, because they get audited. They're like, what? Why wasn't that reported? And the company can't not send a 1099. It's required. I mean, if it's going to take the deduction, why would it do it otherwise? So how do we solve this? How do we make sure that the IRS knows what it is we're doing, which code, 280A, that we're invoking?
I don't know. But I do know they love to be communicated with.
They do.
They do.
Mostly.
That's a big mistake that most people make mostly is they're just afraid. They don't want to talk to them, and they certainly don't want to read the letters they get from them. So communication's everything.
We're going to have to do a whole course, a whole podcast on how to respond to the IRS.
Yeah.
I'm seeing all these things that we need to do. I hope you're writing these down because I'm not.
I got a list.
I got a list. Sterling's the organized one. She's also the good looking one, just in case you hadn't figured that part out.
Yes. Thank you.
So the solutions is usually not available to your CPA because they file electronically. And if you file electronically, it's very, very difficult to do this solution. Send them a letter. Now, if you file electronically, yes, you send the stuff in, they're still going to flag it. It's still going to be, hey, there's $10, $20, $30, $40, $50,000 missing on income here. They got reported from this company. Where is it? If you send a letter to them, that's going to go to a different department. Someone else is going to see it. They're still going to generate a problem letter to you. At the very least, maybe an audit summons. And then there's going to be this weird lag. And if you've ever worked with the IRS, you know that one department has no idea what the other department's doing. Even with their new AI upgrades, it's still like, wait, we don't know, huh? What? You ever tried to call the IRS? By the way, don't call the IRS. If you ever tried to call the IRS, yeah, Sherry, you got it. You ever tried to call the IRS and they're like, well, I sent this in to you 6 months ago. We don't know, but yeah, okay. So write the letter. And if you can, there's new rules around filing on paper now. If you have more than 10 information, or if you have more than 9 information returns, you can't. You have to do electronically. But if you don't, you can send the letter in with your 1040 saying, hi, this is me, the taxpayer. I'm invoking 280A for $25,000 that I received from that use of that code, the so-called Augusta rule. I haven't reported it because under that code, my understanding as a sovereign citizen of the United States is that I don't have to report it. I've done so. If I'm incorrect around this, please guide me into reporting this. I'm not trying to avoid taxes. I definitely know that a 1099 was filed on my behalf from XYZ company. And you probably have that, but note that my understanding of 280A is that I don't have to report it. If I do, let me know. Thank you so much for your service to the great citizens of the United States. Goodbye. That's a letter. Please don't use those words. Use your own. But that's what you would do. And now they have total understanding of how this works, and they're good for the most part. I've never seen anyone do Augusta, send a letter, and have any problems.